Good morning, everyone, and welcome to another live trading webinar. I hope everyone is doing great so far, and we are ready to start with the risk rewarding, of course. So this content is for general information only and is not intended to provide any trading or investment advice or any personal recommendation. And please make sure you download your Admirals mobile application, and please be informed that every Monday we have the weekly fundamental analysis in terms of the podcast, and you can listen it directly from the website. Saying that, we are ready to go through the markets. I hope everything is fine with the chat and you can use it. Let's check some comments here. Good morning, Theo. Good morning, Larry. I hope you're doing great. William said, good morning, Theo and everyone. Good morning, William. Maria Julia said, good morning, all. Good morning, Maria. So let's find the pound. Let's start with the pound first. This week, we can say that is pretty much a CPI week. Let me just bring the calendar. One second, guys. Moment, let me change this one. Let's change the screen. Okay, so Wednesday and Thursday, based on this calendar here, we have inflation rate just came out 30 minutes ago. Previously, it was 8.7. The expectancy was to drop to 8.2%, and the actual came as 7.9%. Later on, building permits in the US, and tomorrow, Thursday, trade of balance in Japan. Trade of balance usually in Japan causes some volatility, of course, in the currency market. Cherry said, good morning, everyone. Good morning, Cherry. Mohammed said, what any material our book to develop from my level. Guys, I will definitely recommend technical analysis by John Murphy. You can Google it, and it's a quite heavy content in the book, but trust me, it's very useful. You just need to read, if you are a beginner trader, the first few subjects. I think they're going to cover you fairly well. Mladen said, good morning to Theo and all. Good morning, Mladen. Ruben said, good morning. Good morning, my friend Ruben. X-Man, how are you doing, my friend? Good morning, X-Man. Ruben asked, if the inflation was less than expected, why did the pound price drop? Because that's a great question, actually. Let's check the pound. Inflation, I mentioned it on the podcast, guys, and that's why I'm not saying for Ruben now, I'm just saying to everyone. In the podcast, I mentioned this stuff many times. When the inflation, the CPI numbers or inflation in different calendars, you see it that way. When the number rises, it's good for the currency. It's good for the currency. It's not good for our pocket, but for currencies and strengthen is absolutely great. It strengthens the currencies. And when inflation number drops, it weakens the currency, because pretty much what is inflation? It's as for consumers, it's the rise of goods and services, right? But for the currency, it creates more strength in the currency. That's all. And when the numbers, they are negative, it helps the currency to drop. That's the explanation. Johnny said, good morning. Good morning, Johnny's Nick. Hello, my friend. How are you doing? Good morning, Nick. Mohammed said, oh, you already finished it. After that, you can look at Candlesticks by Steve Ninson. That's another amazing book if you are trading candlesticks. Mr. Carlos said, good morning, guys. Good morning, Mr. Carlos Mogiol. Good morning, Mr. Theo. Good morning, Mogiol. Daminka, good morning, sir. Good morning, Daminka. I hope you're doing well, and thanks for joining us. So, back to the charts. We came at this resistance here, nice bearish engulfing yesterday, as you can see, and the market is dropping. We have this area of possible support up to this point. Euro against the US dollar. Yesterday, we tried for this bearish engulfing, but the market didn't react it. So today, we do expect that the market is going to push lower. Let's check for this counter trend trade. It's 65 pips, and the ATR, it's 68. So if I place a sell stop order here, I would like to go for about half the ATR, because 66 until this area of support is not at any favor. Let's check the fib retracement. We are at 32. All right, I will keep an eye on that, and I'll guys let you know if I initiate any trade. I'm thinking for a trade to sell below the low of the previous candle and have a stop loss somewhere about 35 pips. Australian dollar against the US dollar. This resistance here hold fairly well, and the market is selling off, and that's great for those who traded the inside candles. New Zealand, US dollar, another weak market. This nice topping pattern here, price rejected from this resistance, and it's driving to the downside. Let me check some comments here. Trading for Living by Alexander Elder. I found this to be a great book. Ruben shared with us that Trading for Living is something that he found it very useful, and I always credit that as well for Alexander Elder. So yes, guys, if you would like to read more, he explains the tribal system. So it's a great book. So Mohammed, you can try Trading for Living and let me know if you already finished that. Okay, now you are reading Trading in the Zone by Mark Duck. That's awesome. Palmier said, good morning. Rumen said, good morning, everyone. Good morning, Rumen, and good morning, Palmier. Next one, US dollar, JPY. This bullish engulfing hold here, and the market is trying to push higher, so that's good. Some bullishness expected on the US dollar, to be honest, as we can see from the charts. USD against the Canadian dollar. Yesterday, again, we didn't have any major push to the upside. Let's delete these lines from here. Euro JPY. Still rising, higher highs and higher lows. Great British Pound against the JPY, nothing here. Aussie, JPY, still nothing here. We are in the middle of transition, and either this transition, it will end up like a consolidation and then break to the downside or to the upside, or it's going to make this rejection and create a new low. Either way, we're going to be looking for some clarity first, and then we're going to try to trade it. Canadian dollar bounce off this support and is trying to push higher. Nice hammer yesterday from the support. For those who are trading hammers, looks like a good opportunity here. New Zealand JPY. Yesterday it came all the way and it false break out the support. Today this candle tried to surpass the previous candles, the previous days open, and it's selling off now. So fairly weak, the New Zealand dollar. Euro against the Canadian dollar, I was looking for the bearish engulfing, but it didn't happen yesterday. So we have few areas to watch with this currency pair. These trend lines very far away from the current price. This one here, it's fairly steep. We ideally want the trend line that it's about 45. It has an angle of 45 degrees. If we draw the FIB from low to the high to find the possible retracement, and in the currencies, we all the time mention that 50% and 61.8%, 50% is the minimum retracement we would like to see. Rarely I see the market stop and reverse at 38.2. It must be very strong trend. So even if you try to take some counter trend trades here, you can use these numbers for possible take profits. USD CHF, very strong CHF in general, because we see how it drives the US dollar. I don't have any pattern here or any support to buy it. Euro, New Zealand very weak. Euro, it's still showing some strength as we analyze the Euro US dollar and the New Zealand US dollar. Euro against the pound. This bullish engulfing here, we mentioned about this double bottom, bullish engulfing. The risk reward wasn't favorable, therefore we couldn't initiate any order here. Pound, Australian dollar, market break this upward trend line, and once it broke to the downside, of course, the retest back to the trend line, it shows that the trend line acted as resistant. You can see it clearly. That was a nice tentative trend line. Then we break to the downside, and then the price tried to push higher, but it failed at this point. And again, many people have that question all the time. So how do we trade fundamentals? And the answer is, you don't trade fundamentals themselves in Forex market, okay, in the currency market. But if you see the technical picture, let's say a currency is at resistance and the fundamentals come out as weakening the currency, it has high chances if the currency will follow through with the fundamentals. And again, I explained this extensively on the podcast, so I'm not going to take time from this webinar to go through that. In long story short, the price, it's going to move faster because of the fundamental events. That's all. You can refer back to the podcast to learn about all this stuff, guys. So, pound against the Canadian dollar. Weakness in the pound, it's obvious across the board. Pound New Zealand. New Zealand, it's very weak. As you saw from the analysis, it's not the ideal currency pair to look for some short or some buys. If you see very, very weak pound and very weak Kiwi, chances are it's going to move in a sideways consolidation environment until it's going to finally break to the upside or to the downside. Next one, Australian dollar, Canadian dollar. And I don't see any pattern I can recognize here, to be honest. We draw some lines. Let's see if this trend line matches. We want to take this trend line up to this point here. This one. Yeah, it rejected the trend line, inside candle, break to the downside. For those who take this kind of trades. So it's 60 pips risk for 180 pips reward. It's a fairly good one, although it's close to the ATR. Ideally, I like to have a stop loss pretty much half the ATR, or at least the 2/3 of the ATR, not just the full ATR. Australian dollar, New Zealand. I was looking for the bearish engulfing yesterday. It didn't happen. Remember, I commented about this long tail candle, and after we didn't see a continuation from the next candle, and we saw some kind of bullishness behavior, it just scratched the trade because it shows that the Australian dollar is stronger than the Kiwi. New Zealand, Canadian dollar, again, on the weekly chart, I identified a trend line, downward trend line, and here exactly it's where it is. 2 touches, that's the 3rd touch. So a bearish engulfing didn't occur, and I didn't enter this trade. So here we had a nice bearish engulfing, but not here. So that's okay. DAX, we're going to leave it for the next few minutes. Gold broke to the upside nicely. You see, guys, at this point here, remember I commented the market, it wasn't at any strong resistance. Strong resistance found here, strong resistance found there. But here there is no strong resistance. So why to try and sell at this point? But even though some of you try to solve it, guys, you have to let's make it clear. When we trade candlesticks, again, we don't mean that we trade candlesticks in isolation, okay? But as a part of the overall picture. But even when we trade the candlestick, we have to be aware that if the candles they follow, they don't move in the direction we expect them to move, it means the force it's not there. And if the force is not there, if we lack the momentum, chances are that the move is not going to happen, or it's not going to occur the way we want to occur. So please be very, very suspicious. Every single day you come and you are in a running trade, be suspicious. Did the candle follow through? Did the forces in the market support it, the move or not? In this case here, as you see, it's not a bearish engulfing, but it's a strong bearish signal. It closes below the body of the previous one. It falls break as well here. So chances are we can see a continuation. Let's say we sold there, and the next candle, what is the next candle? It's a rejection of the sellers. So maybe we lack the selling pressure. The sellers are not joining at in any way here. So we could have scratched the trade. Now, because here we have a small zone, as you can see that, instead of drawing a bunch of lines in the chart and make it complicated when we look at the chart, I will move this this line from this point and I will put it on this zone. And we see that the candle didn't move beyond that. So maybe here is a seller's zone. How are we going to identify if sellers they will come? If today, after this explosion, we will see a small candle inside within this long candle. And if that's the case, we're going to try to either sell from here or find the bearish engulfing and sell it. WTI, bearish engulfing from resistance. We saw yesterday an inside candle. The market didn't sold off aggressively, but still, we still have chances. Maybe it's going to be the beginning of a downtrend. We don't know this stuff. And that's where sometimes we have to, not sometimes, all the time, we have to understand the nature of trading. Okay. Even though we're going to trade and we're going to identify the nice opportunity, maybe the candles following that move, they won't give us the clarity we need to stay in the trade. Okay. And that's why, if you noticed my system with the bearish engulfing, I have only about 35% of winning trades, 30 to 35%. Out of 100 trades, minimum, I lose 65. Most of the times I look at about 70 trades, but always I'm on profit overall. Not every month, not every quarter, not every week. This is something very, very wrong behavior by traders. We measure, guys, write this down. We do measure our trading performance based on the trades sample, not based on monthly targets. This is not a restaurant business. This is not a supermarket business. Okay, with all the respect to all the industries and the business out there, this requires different approach. And if you try to measure your performance based on months or monthly performance, on weekly performance, you will already identify some sort of frustration. Why? Because you don't know how many trades you're going to take every week, and you don't know how many trades you're going to take every month. So far, my last 6 trades, personally, all of them losing trades. But for me, that's okay, because I know I can take 15 and 20 losing trades in a row, and I'm fine with that because I measure my performance based on 100 trades. If these 100 trades, they're going to appear in 2 months or in 6 months, let it be. I'm okay with that. All right. If you try to measure your performance based on monthly and weekly targets and percentages, I know for sure, because I went through that, you're going to experience frustration. Okay. So please understand this. Silver, higher highs, higher lows, very strong silver. We surpass this resistance. Now it can act as support. If we go to the weekly chart, we can try to find the next resistance, and it's up here. Too much room for the price to move. And as we mentioned, it's not going to happen in a straight line. Currencies, they are more famous for their cyclical environment. Uber, very nice inside candle, stop the move, and we see some sell-off here. Bitcoin, yesterday, we tried to break to the downside. After the lack of momentum at this point, I was expecting for a breakout. Now, I believe that we're going to come to retest this environment here anywhere between $28,000 to $26,000 based on the technicality of the picture. Okay. Which one? Let's find the DAX. Daily. Let's clean the chart. Yesterday, I had a question, but I didn't manage to answer that question because I stopped the webinar. I had to stop the webinar due to the time. I think Darshan asked why, as I understand that support and resistance at some time they're going to break, I don't initiate also positions to sell the support, because selling the support, it's a low probability trade. We say that we expect support to break to the downside and price to penetrate well the support, but it's a low probability. Here we are trading high probabilities. And that's why I don't trade this using an EA or a bot, because you need the human interaction when you trade, especially when you're scalping. There are some things that, because you are a skillful trader, the bot cannot identify them if you want to do it purely mechanical, right? Like right now, we are sitting at the resistance. If you guys buying the resistance, it's good when the market moves far and beyond the resistance. We buy the resistance when we have trending market, when we have ranging markets, or when we do scalping on a 1 minute chart at the London Open. It's likely to be successful by consistently buying the resistance or sell the support. Okay, by all means, that's how I trade. I respect every single one of you here, the way you trade, the way you read the market, your opinion about the market. There is no right and wrong here. So whatever you feel it's appropriate and more in your advantage, please use that in your benefit, of course. So we see a lot of activity in the last hour on the DAX. Ideally, I would like to sell this point here on the 5 minute. Let's see if there is any fib. 61 is down there. Support, it's much beyond this area if the market will decide to go. So I place a sell stop order below the low of this candle here on the 5 minute chart. For buy stop orders, if you guys feel that you have to buy the resistance, please act as for your best interest. Absolutely, nothing wrong with that. But for me, I prefer to sell this market, and if it's gonna pass beyond the resistance, it's okay. I'm okay with that. I'm just telling you the possibilities, and you can act based on how do you think is best for you. So Mladen said, Theo, what do you think about sell stop on the pound US dollar, like you do on the DAX at the beginning of London session? You can absolutely do that. No problem with that. I didn't, as I explained other time, Mladen, I didn't backtest it to know the results. You see here with the DAX, we are more consistent on taking profits. It's something I backed, it's something I trade for years. Of course, we have losing trades, absolutely. But overall, I think it left us with good winners. But to trade anything on London session that has to do with the pound or the FTSE, absolutely. Yep. I support that too. So let's see if it's going to break to the upside or if it's going to melt down. I really expect it to melt down and come in and retest this area of support. Broken resistance, connect the support. Willie posted on the Q&A. Sorry, Willie, try to use the webinar chat instead of the QA. because I don't see the QA like I see the chart. Willie asked, is there a way to save your webinars? I will answer your question. I don't know if you can save it, but for sure, after I stop the streaming on the YouTube, they automatically upload it on the YouTube channel. So you can refer to the YouTube channel and you can rewatch them. Charles said, thanks, you are very welcome. You are very welcome, Willie. Guys, by the way, for those who participate on the Zoom webinar, I would like to ask you if you have a few seconds after we end the webinar to leave some feedback there. It will be good. It helps me to understand what we do good, what you want to see more on this webinar. Remember, it's only for 30 minutes and I try to cover the vast majority of the currencies. Sometimes, yes, we don't cover the indices. I'll try to be more consistent with the indices as well if you are trading indices. And yeah, and also feel free to give us some likes on the videos. That's something reflects personal to me, so I will appreciate that if it's okay with you. All the feedback you leave on the Zoom webinar are anonymous, unless you want to put your name in the comment section. Only then I will be able to know who left the feedback. But if you don't manually type your name, then they stay anonymous. Oh, I saw 2 likes came on the video. Thank you so much, guys. Now, Theo, what are we waiting for? We are waiting for another 3 minutes to see a break to the upside or to the downside. And this is the 5-minute chart on the DAX. It's something we do day in, day out. Mladen asked, maybe you could once explain us how do you do backtest on the proper way. There are two ways to do backtest. And in my 12 years career in active trading and coaching, of course, because I learned the most from coaching, by coaching other traders. When you try to backtest based on the old data, humans have the tendency to look only for winning trades that could happen if they took that trade. And that's the issue. Now, knowing that and understand that, and I don't take myself out of this. When I was a beginner trader, I used to do that as well. I bought softwares, they were backtesting and all this stuff. But again, I was looking only at the winning trades, and we are humans. We all do that. It's fine. The best way, if you ask me now, how do I backtest? I create a demo account here with Admirals, of course. And Darshan, finally, we made you talk, my friend, today. How are you doing, Mr. Darshan? So now the way I backtest, I created a demo account and I take the trades I want to backtest. But I try to take them. Okay, I don't backtest anything on the daily charts, but if I want to backtest, if you want to backtest, let's say the same methodology with the pound US dollar or the FTSE on the London Open, you can open the demo account, go on the 1-minute chart, and every day at the same time, here it's breaking to the upside. Let's see if it's going to be a false breakout or not. So for those who bought the resistance here, guys, good call, good trade. 17 points already played in your favor, and it's still climbing higher. So I cancel the pending order here, and back to the back testing to end with that and end the webinar. Try to do live trading on a demo account, exactly what you have done with real money, and that's the best way to back test anything, guys. Okay, so with this, I will leave you for today. I hope you enjoyed the webinar. Thank you so much for your participation. I really appreciate and respect every single one of you guys, honestly. And I wish you happy trading, and I look forward to see you again tomorrow at the same time. Thank you so much.